Forex Focus brought to you by IG, and with such a busy schedule of central bank meetings upcoming, we thought who better to bring on but our own Paul Capetta. Paul, my friend, we're going to dive into not only the Fed's coming meeting, but also meetings from Switzerland, from England, and from Japan as well, and how they could affect the dollar. My friend, how are you doing? You excited about the coming schedule?
Oh, yeah. This is probably one of the most exciting weeks we've had in a while. It's definitely action-packed, kind of keep you on the edge of your seat. It won't be as boring as the summer months were. When I say boring, it just didn't get a lot of price action, but it should be interesting to see what they have to say. Will they crash the dollar? I don't know. The U.S. Fed's at least taken a measured approach throughout the year, so they haven't necessarily been hawkish or dovish really at times, so they've stayed really even keel, and they haven't kind of done anything that they didn't already tell us they were going to do. So there hasn't been anything shocking yet from them, but you never know with these guys. They've in the past shocked us.
Yeah, so. Well, and it's funny, you're exactly right that the U.S. central bankers, at least, I mean, honestly, since Yellen and now Powell, have tried to be not shock-inducing whatsoever, have tried to be so measured so that by the time, I mean, it's why going into every meeting, and we'll get to the odds for the upcoming Fed meeting, but maybe it's more relevant, the odds for the next Fed meeting. By the time we get to a Fed meeting, you pretty much know what's going to happen, but you don't know what they're going to say. And also what they can't control is what other central bankers have been saying, which has been setting up the U.S. dollar in one, a very strong position, but two, a very vulnerable position in terms of what Fed Chair Powell says, because the ECB kicked things off a few days ago, and what they came out with, which was a classic, something that makes people's heads spin, Paul, but has been a classic move of late, which is the dovish hike. And maybe you can explain to us why we saw a 25 basis point hike from the ECB, a historically hawkish event, something that should cause everything else equal, your currency to appreciate. The euro fell almost 100 pips on the same day.
Yeah, so the idea of a dovish hike, which is kind of almost like an oxymoron of sorts, it's basically they're going to hike now, but there's less of a chance of hikes later. I mean, then earlier this week, so yesterday, they even kind of walked back some of that. So, I mean, you saw a brief rally in euro. It's given back some of that today. It's bounced around. Between 106.50 and 107 is where it's been in over the last couple of days. But I mean, the inflation in Europe, I mean, it's going to be a tough winter for them. I mean, the natural gas prices are high. The oil prices you talked about earlier are high. So the inflation is going to be there. So how much they can stay dovish with these hikes, we'll see. But yeah, I mean, it was an interesting sort of price action off a hike, that's for sure.
And yeah, the point being here that, it's been bouncing around the last couple of days, but has brought this euro dollar market down below 107, which in the grand scheme of things is a low price for euros and an expensive, a strong price for dollars. You throw on top of that the dollar relative to the yen and the Australian dollar and some of these even more vulnerable positions, the dollar's at near highs historically and in a very vulnerable spot. If Powell even comes out and says something similar to Lagarde from the ECB or comes out and the expectation here, Paul, is that we're not going to hike, which again, on the face of things, it might look like, well, okay, so the European central bankers hike, the U.S. doesn't hike, and the U.S. dollar rallies. How does that make sense? Well, it's all based off of this U.S. relative strength. And though the expectation is that they're not going to hike here in September, there's still counter to the ECB and counter to, obviously, the Bank of Japan, who still has never moved over the course of the last couple of years here. We still have potential hikes on the table. You'll see these odds shift, Paul, but you'll also see these odds shift simultaneously with the dollar market. And maybe you can illuminate what that price action looks like. Essentially, on one side, you have a potentially hawkish Powell tomorrow. What does that look like in terms of rates and U.S. dollar? On the other side, if he does go the way of the ECB, a more dovish Powell, what would that look like for U.S. rates and dollar?
Yeah, so it's going to come down to how the Fed is interpreting our latest inflation prints. That's been their main kind of target over the last, we are now 2 years into this, pretty much. Yeah, so how they interpret the inflation print, we had CPI last week, came in a little bit hotter than expected, was an uptick as opposed to our trending downtick. So it was a little bit of a change in trend in inflation there. We have PC next week. So that will be eyes on. So obviously you don't have, there's a very unlikely chance, that's what the market's priced in, that they'll hike tomorrow. They'll probably hold rates unchanged based on that and based on what they've done. But into November, because we also have a November meeting and a December meeting, no meeting in October, but this November and December meeting, the odds of a single rate hike, there's still pricing in some chance of 2 rate hikes, which if you see inflation tick up, these odds will change dramatically. Yeah. And I'm just, for the inflation, it looks to be energy markets right now. The job market showed a little wobbleness in early September with the non-farms that we got. But it's not enough to maybe change the Fed's opinion on the job market. So they're going to be, I want to hear what they say about inflation, and that's going to move around this, and it's also going to move around the dollar. Because if they're thinking inflation is going to be sticky and be higher for the end of the year, there's more of a likelihood that they're going to have to raise rates.
And he's left rate hikes, that is, on the table. Like at no point, and that's why there is the potential for this dollar to really crash if he changes his rhetoric at all to, like I say, mimic Lagarde's or some of these other central bankers like those in Australia who have been like, we're not so hot on more hikes. We're worried about inflation, sure, but we're worried about our economy slowing down. If he gives any semblance of that, I think you might see the U.S. dollar market give up some of its recent rallying and get into a potential bearish mode here. On the flip side of things, if he comes out strong as he has been over the course of, like you say, the last 2 years, and he says, yeah, we saw that uptick in inflation, we're watching it, and we have not only 1 rate hike on the table, but maybe, to your point, 2, that 4% chance might look more like 10% or 15 or 20% by tomorrow's end. Nothing likely to happen in terms of changing rate hikes, but that rhetoric will really shift these odds. And what's really been nice about rates and forex recently is they've been pretty much 1 for 1. That is to say, U.S. rates moving higher, U.S. dollar moving higher, U.S. rates moving lower, U.S. dollar moving lower. So if you see these odds around rate hikes increase, you'll likely see some dollar bullishness. On the flip side, though, like we say, this dollar is in a very vulnerable position. You look at the dollar yen market, which is, Paul, up 12% year to date here, above 145 comfortably, within a stone's throw of 150 which is last year's high, which is the last 20 years high in this market. Any dovish talk could be the undoing of this dollar to a large degree, a little bit of a larger they are, harder they fall kind of mentality with this dollar market, right?
Oh, yeah, exactly. This one is going to be an interesting one because you have BOJ on Thursday evening, which I know we're going to talk about later. But, we're pretty much at some extreme price levels. We saw those extreme price levels, again, it would be almost a year ago in October, where it got up to 150. Yeah, again, it always depends on what he says. If he's dovish, this is going to give back some ground. Could be quick, could be not, depending on kind of the rhetoric he uses and how the market takes it. But on the flip side, again, if he's hawkish, there's nothing that says we can't go back to 150. So
100%. Yeah, a really interesting spot for a number of these forex markets to either push through to last year's extremes, which are for most of these markets multi-year, maybe even multi-decade extremes, or give back some of this ground to get to historically more normal prices. But let's talk about it right now, because we do have the underrated Swiss National Bank. I'm going to be a hipster here and say that that's one of the central banks you should be watching. They're due to expected to hike by another 25 basis points. And the price action between Swiss franc and US dollar has been really interesting the last year. Extremes that we saw in Swiss franc over dollar, and now dollar gaining back some ground. That'll be an interesting one. Bank of England, they're due to hike 25 basis points. Japan, not due to do anything. But to your point, at these extremes, with the yen low, dollar high, wouldn't be surprised if central bankers in Japan, obviously noting that, do something or say something a little bit hawkish to try to push that yen into a more normal position. Out of the big schedule here, what are you looking for most outside of obviously the FOMC?
Yeah, so I mean, the Swiss National Bank, I mean, I don't plan on being up at 3:30 on the 21st to watch that price action, but that'll be interesting to see. They're looking at their rates. They're a little behind on the rate hikes, right? So, I mean, we'll see what they say. If they're playing catch-up mode, that could be interesting. That could be an interesting dynamic in the dollar-franc pair. Even if you wanted to play a cross pair and look at basically from 3:30 a.m. to 11 o'clock on the 21st, you could play some Swiss franc yen off the price action. Should be an interesting one there. That one's interesting. I'll read about it in the morning when I wake up. Bank of England is, again, they have had a hard time getting inflation down.
Yeah,
and
the highest of the majors, really.
Yes, yeah, exactly. Like a real hard time. It's, I think I was looking at, still close to 7%. Might be slightly below right now. They have an inflation print, I believe, tomorrow morning. Give me 1 sec to check. I had it up here.
But they have been.
Yeah, they do have one. They do have an inflation print tomorrow morning. So
1-2 punch for that pound. That'll be a really interesting market to watch over the course of the next 48 hours.
And then when you basically round off the week, looks like we have retail sales out of England on Friday morning, but that might be lackluster at best. But to round out the week, really, you have Japan inflation comes out at 6:30 Central, so 7:30 Eastern. That comes out. So if you're going to be watching football games on Thursday night or going to happy hour like we will be, definitely keep an eye on that one. And then the inflation the rate decision at 11 will be interesting to see. And I will note that the kind of economy of Japan has shown an uptick.
Yeah.
The stock market has done pretty well recently there, so it's shown some more economic growth, and they've at least hinted at maybe a change in their policy. We'll see if we get any further on that, or if they just walk all that back, because they've flip-flopped quite a bit.
Yeah, it'll be a really active and interesting rest of the week. Like we say, a lot of the expectations for what these central banks will do priced in. I mean, that being said, if the Fed comes out and surprise hikes, that'll be craziness. If the central bankers in the UK or in Switzerland come out and don't hike, that'll be craziness. Because a lot of this stuff is priced in. And yeah, the question now will become, Paul, for everybody the rest of the week, and you'll be able to check this also after the fact, after these central bank meetings, how much of this dollar strength that has been priced in will end up being too much, or is it going to be not enough? We'll find out here in the next 48 hours. Will be a lot of interesting action. Paul, thanks as always for joining us on the program, and thanks everybody out there for watching. We'll be back for more later on. Have a great trade, everybody. Peace.